Welcome to the daily briefing from interest.co.nz. I'm David Chaston. Today we review the New Zealand finance industry and its place in the economy. We look at mortgage margins, review the trading activity in the Kiwi dollar, and we'll wrap up with what the other media are reporting. The annual Enterprise Survey is New Zealand's most comprehensive source of financial statistics, providing annual financial performance and financial position information about industry groups operating within New Zealand. Industries covered in the survey contribute approximately 90% of New Zealand's gross domestic product. Statistics New Zealand has just published the survey for 2006, and in it we get a good fix on how important the finance industry is to our economy. The size of the numbers might surprise you. Total assets have grown for all businesses in this country from 2000 to 2006 by a massive $500 billion, or 65%, to a mind-boggling $1.3 trillion, including almost 9% growth in 2006. The finance industry, ANZIC code K73, this is not including the insurance industry, has assets of $645 billion, or a massive 48% of the assets of the whole economy. But one notable difference between the finance industry and the rest of New Zealand's enterprises has been that in 2006 their shareholder equity investment has fallen by some $17 billion, reducing its equity ratio from 26% to less than 22%. In large part this is due to the main banks gearing up their balance sheets, principally because the regulator, the Reserve Bank, has allowed them to. ANZ, the National Bank and the ASB have all moved mortgage rates in the past few days, and there have been a range of non-bank lenders who have moved as well. But a defining trend up or down is not evident in these moves. There is an expectation that rates will be moving higher, however. Last week the chief ANZ bank economist said his bank was preparing to reflect the high international credit costs in our mortgages. But even though ANZ has the dominant market position in New Zealand, it can't act unilaterally. This market is still highly competitive. The market to watch is the wholesale swap rate. This is the benchmark cost that banks price their fixed-rate mortgage money off. We track this cost closely, and a review of the 2-year average bank mortgage rate, less the 2-year swap rate, shows that current rates are priced at about the long-run average margin, about 0.75%. There may be a small amount of room for margin discounting in the upcoming spring mortgage campaigns, but it won't be more than 0.25%. So if the base cost rises, there'll be little option for banks but to follow that cost up. Today the trading volumes in the New Zealand dollar are huge, and those volumes have grown enormously in the past 5 years. In 2001 this trade averaged $500 million per day. In 2007 the daily trade has grown to over $13 billion a day, and some of those trades are absolutely enormous. On one day in January 2006 one trade amounted to $9 billion. By way of comparison, our exports in the year to June 2007 were a bit over $33 billion. Yes, $33 billion per year, or less than a week's trading in our foreign currency markets. Dr. Neville Bennett has produced a fascinating read on this whole subject. You can link to it from the News tab in the drop-down menus on this website. And finally today, a quick wrap-up of some other recent news. Most economists expect the Reserve Bank to start cutting interest rates later next year, but two forecasters, including Westpac, now predict rates will be lifted further, according to a Reuters poll. And in the world is big category, we have two links that reveal just how enormous it is. The Sydney Morning Herald has a story that follows Australia's iron ore to China, fueling that economy's truly astounding growth. China is building a new city the size of Auckland every 3 weeks. And Japan has just split off the banking functions from its postal service, and the result is the world's largest bank. You can get more news and stay up with Newsmaker Views on our news page. Join us again tomorrow for the freshest finance news on the web. We'll see you then.